Hello, everyone. Rob.Wolf from the Loan Factory, and you are listening to the Lone Wolf podcast. That's loan spelled Loan. You can also watch it on my YouTube channel, the same name, all one word, the Lone Wolf podcast. I am a loan officer licensed in Florida, the Sunshine State where I live, and Pennsylvania where I grew up, and Colorado where I vacation every year. You can reach me by email, rob.wolf@loanfactory.com, or call me on my cell, 727-366-5722. I am not a bank, so you can reach me after 5 o'clock. This is my only form of communication, and you can even catch me on the weekends. All right? I'm in the ABC business, I always say. Always be communicating. This podcast is just me. But if you want to be a guest and you're in the mortgage/real estate industry, maybe insurance, or you're a builder, anything like that, let me know. We can work something out, and we could create a video podcast, and you can put it on your own website and help your business out. I keep these podcasts to about 15, 30 minutes. This one might be a little closer to 30 minutes, and I air them on Wednesdays at 9 o'clock. And if you miss one, just again, put in your Google search, the Lone Wolf podcast, and check out previous episodes. So today we're going to talk about documentation/income that you need for your mortgage. Okay. And I'm going to kind of talk about it in two stages. But speaking of documentation, can you guess why we need the documentation? Did somebody say the 2008 housing crisis? Yeah, believe it or not, people were getting loans without having stuff validated. It was before my time of getting into the industry, but I've heard stories, and you could probably check with some senior loan officers. The running joke was it was a sniff test. You got a job? Okay. How much money are you making? All right, we'll put that down. So anyway, as you go through the process of getting pre-approved, and more importantly, once you have a contract, keep this in mind. Okay. The government does not want this to happen again. So they're going to validate and check everything that you've submitted. Okay, now I'll help you along the way, as a good loan officer should. And during this podcast, I'll explain why some of the things are needed, and hopefully that'll help out. Okay, so another thing before we get into the weeds, when you're asked to give documentation, okay, don't take it personally. Okay, you're going to be angry because you thought that was taken care of, but we've got to get the loan. Okay, so we need to be organized. Another thing is, don't try to do a quick fix when you're asked for documentation. What I mean by that, don't take a picture on your phone and send it through a text to me or your loan officer and think that's going to be good enough. It won't. Okay, we can't take pictures because they're not good quality. We can't upload them into the file, and the processor certainly won't like it, and the underwriter will definitely kick it back. Okay, so to save everyone the heartache, let's make sure we are utilizing scanning. Okay, so scanning, you can get your bank to send a documents to you via a link, and then you can upload those into your application. And the same thing with your taxes from your accountant. Now, personally, I would never email stuff to my loan officer. It's not secure. It's not a secure portal. Do you want your Social Security number out there, your taxes, your pay stubs on an email that could get intercepted? Okay, so that's why we have secure portals, to avoid that. Now, if you're unfamiliar with scanning, or you don't have a scanner at home, I can tell you, let me get this up real quick. Hopefully, I don't know if you can see that, right? Oops, there. Okay. It's an app. It's Notes. Now, I'm not going to go into details, but I have an iPhone. I'm sure all the other have them. Just click that. And there is a function on there that you can scan. So if someone's asking for a bank statement, your most recent one, or whatever it may be, go ahead and take the picture with the scan function. You can edit it, the border and what have you. You save it, then you send it to your email or you send it to somebody, and then you can upload it into the file. Okay, so hopefully that makes sense. You should have a scan function on your phone, and just remember to utilize that. Okay, so let's get into the meat and potatoes of our podcast. So you're probably at this point already, or maybe not, but to get pre-approved or pre-qualified with a loan officer, I'm going to need an ID, bank statements, pay stubs, and a W-2 or maybe taxes. Okay, and that's about it. Now, if I see something when I'm processing a loan, I'll need some more documentation because I want to try to get that up front as much as I can. And I'll let you know we need this, this, and this, and I'll go into more detail. But let's just say, for example, it's Friday afternoon. You're going to the airport because you're up in Pennsylvania, Jersey, or someplace, and you're coming to Florida on a weekend scouting trip to look at condos and houses and what have you. And you are able to get me your pay stub and taxes and bank statements real quick. Rob, I need to get pre-approved. I'm coming down this weekend. And you don't have a way of getting all that other documentation. Okay, so let's use that as a foundation. I can still get you pre-approved. I can validate those. All right, we've got a pre-approval letter. So let's talk about the ID. Okay, now I'm going to go into more detail of these. Okay, the ID, that's pretty straightforward. It's a driver's license. It's a passport or a state ID. It's got to be a picture ID, okay, because we have to validate who you are, okay, who the lender is giving the money to. So that's easy. Okay, bank statements. We need 2 months worth of bank statements. And these could be your credit union, your Chase Bank, Bank of America. It could also be your 401k or your IRA, some investments, brokerage account, whatever it may be. I want to caution people here, though. Only give me or your loan officer what you need to get pre-approved. For instance, if you've got 4 checking accounts with $3,000 balance in each and a 5th one with $50,000, and that's the account you're going to use for your down payment and closing costs, okay, just give me that. Okay, I don't need those other small checking accounts. Now, if you do have a big IRA, which will help getting you pre-approved for a dollar amount, then we need that. But all that other stuff we don't need and we don't want. And the reason we don't want it is the more information we supply, the more the underwriter will be looking at that loan. And the underwriter may find something that looks a little suspicious or curious. So they're going to call you and ask questions on it. Okay. Now let's back it up a bit. If you've got 5 accounts and they all have about $10,000, you don't want to say to your loan officer, okay, I'm going to deplete this one. I'm going to deplete that one for my down payment. No, this is where we need to transfer them into one account. Okay. So get that out of the way, transfer them into an account. And then once you do that, don't keep transferring as we go along. Okay. So keep that in mind. So you've transferred it into one account, and that's when I get you the pre-approval letter. Okay. Once we have a contract signed, you've got a property and it's signed, that is the worst time in the world to start moving money around. You're raising red flags. Okay. Because the underwriter is going to see money coming into that account or money going out, and they're going to question it. So you're going to have to provide documentation. Okay, so make sure, I think I've hit this point, make sure you've got all your money that you're going to use for the down payment and the closing cost. That's the account we're using. Okay, so hopefully that I spelled that one out. Okay, income. This is going to be a big one. The most basic is your pay stub. Okay, you work for corporate America or some company, they give you a W-2 or a pay stub every 2 weeks, and you've got a W-2 statement. Okay, those are the easy peasy ones. But there's also other forms of income you may have put down on the application. It could be a pension, it could be Social Security, it could be an IRA or 401k that you're withdrawing from. It could be rental properties, alimony, child support. As long as you're getting no alimony, child support for 3+ years, we can count that as income. Okay. And then I'm going to talk about cash, part-time jobs, and overtime. Okay. So let's go back to what I just listed. So if you work for corporate America, a W-2 statement that you get every year. Okay. I need one month or 2 pay stubs. Okay. That's pretty self-explanatory. If you're receiving a pension, I will need the pension letter. Why do I need the pension letter and your pay stub is not enough? What if your pension is a term limit and it's going to run out in 2 years? Okay, we have to prove that this pension will continue, okay, for the next 3+ years. Same thing with Social Security. Okay, we need that letter that you get every year showing what your monthly payment will be. Okay, and I caution, if you are going to be receiving Social Security or going to be receiving a pension, we cannot count that yet as income. It has to be active. Okay, your IRA and 401k. Again, if you are planning on drawing from your investments, we need a letter from your financial advisor saying John Doe will be taking $500 per month, and this will not adversely affect his balance for the next 5 years, 10 years, whatever it may be. Okay. Keep in mind, whatever we are using to validate that you can pay this mortgage, that's what we need to show the processors and underwriters. Just because we have $250,000 in a 401k doesn't mean we can say to the underwriter, well, we'll just draw it as needed. No, they want to know the specific amount that you're going to be putting towards the loan payment. Okay, it needs to be in writing. I've been down that road before. Okay. Rental properties. Okay, this is a little tricky because you need to be receiving this rental property for 2+ years, and it needs to be on your taxes. Okay. We need to show this is consistent income. You know, it's not cash. It's not someone you have in the room you're getting $400, $500 a month from. That doesn't count. Okay. It needs to be on your taxes. And then you will send that to the loan officer, and I will put that in a program. I'll be looking at your tax, your Schedule C, I think it is, and plugging in numbers to see what is the monthly amount that we can plug in there. Okay, so keep that in mind. Alimony and child support. We need that letter that you received from the courts that are saying this is the amount of money that you're going to be receiving until this date. Okay, if it's not 3+ years, then we can't count it as income. Okay, but if so, we can count it. So those are the most common forms of income that I see. Let's talk about some other ones. Cash. Okay, I'm in Florida, as you know. The hospitality industry is king down here with all the tourism. There's a place called Walt Disney. A lot of bartenders. So a couple things, and I ran into this with a young bartender. She was saving up her money. She literally had, I think it was $15,000 in cash in her safe at home. So I told her, that's not going to work. Okay, we've got to get that in your bank account. Okay, because if they see a large deposit, they're going to be questioning that, yada, yada, yada. So cash does not count as income. And the reason being is you haven't claimed taxes on it. Okay. So the government looks at that and says, well, if you haven't paid taxes on it, we're not going to allow you to claim that to get a mortgage loan because the government, Fannie Mae, Freddie Mac, FHA, are the ones giving out the loans. Okay. So unless you are claiming all your tips with your taxes, and we can see that, and you're depositing that into your bank account, okay, that's a different story. But most people that have cash or side hustles, that's all it is. Okay. And we're not going to be able to count that income. Part-time jobs. This most of the time does not count unless your part-time / second job, you have been doing it for 2+ years. Okay. And I forgot to mention your primary job. Okay. What we're looking for, you have to have 2 years of employment consistent. Okay. It can't be a break. If you got laid off and it took 2 months to get back to work, now we could do a letter of explanation. But chances are, I know FHA, they don't have much wiggle room at all. And I ran into something like this when a gal was off for 4 weeks a year and 10 months ago, and we couldn't get the loan funded. So make sure you have consistent 2 years of employment. Now think of it this way. The lender is going to give you money for the next 30 years. All they want to see is the most recent 2 years. Okay. So that's our primary job. We want to make sure we've got steady 2 years. The part-time job needs to be 2+ years as well. Okay. Now, what can count with part-time is if that's your only income. A lot of people are on Social Security, they have a pension, and they want to get a part-time job. Okay. We can count that, but again, it needs to be, in this case, more than a couple months. You can't say, well, I'm going to start this job and let's count that income. Okay. So keep that in mind. Overtime. We can count overtime if you're hourly, but again, we need to look at the last 2 years. So what I always ask my buyers, get me your year-end pay stub. That'll show me what your overtime was for this year and the year before. Okay, but we need 2 years. So I want to make sure I'm doing this video in December of 2023. That might work, but let's pretend we're in June. Okay, I've got to get the 6 months of this year, the 12 months of the previous year, and the year before. Okay, but what we do is we look at the overtime in that 2-year period. We see that it's consistent, and then we average it out. Okay, again, the underwriter may see it different than what I see it, but what I always do as a general guideline, if your if your overtime is going up, okay, it's safe to say we can average it out. You can't take the higher end. If your inventory, gosh, I'm stuck on that word. If your overtime is coming down, so you made $10,000 2 years ago, you made $5,000 this year, we may only be able to count $5,000 as overtime. Okay, that's typically how it works. All right. Okay, so that's our income. And don't be surprised if the underwriter is asking for a pay stub, a week before closing. And the same thing with a bank statement. All these things are going on, but it needs to be timely because, this happened during COVID. I was sorry to hear this, but I have a processor friend that they validated employment, and she was let go the week before closing. They were at the closing table. They were hoping that they could still get the loan. So they will verify employment. But, again, your underwriter may be asking for updated pay stub. To make sure you're still getting the income, maybe that you're still employed. They just want to validate that stuff. Let's talk about your house. Okay, this could be contingent upon you selling this house to get into the other house. Okay, that's not an issue. But what if you're buying this property and it's going to be a second house? Or not only a vacation, maybe it's going to be an investment property. If that's the case, you're going to have to provide me with documentation of the properties that you retain. I need to see the real estate tax bill, the home insurance, and your mortgage statement. Because if you're going to retain them, then you have bills. Okay, so keep that in mind. I need to see that you're still going to make the income to pay for not only this new property, but the existing property. Okay, so if you've got rental property and you're counting that as income, or you're not, it doesn't matter. I need to see that. And I'll be honest, I had somebody a couple of years ago that didn't need to count this property as income. So he kept it off the application. And when I ran his credit, I saw the mortgage. And so I asked John Doe, what's up with this? He said, that's my other house. I said, I need some documentation. And he literally said, what business is it of theirs? I'm not counting this. So I had to tell him politely, you owe real estate taxes on that property and insurance, even if the house is paid off. Okay, so don't try to hide stuff. We're going to find it when we run credit, and the underwriters are going to find stuff as well. And I'll tell you another story about that. So anyway, keep that in mind if you got multiple properties. Okay, so the other thing is taxes, W-2s. Okay, that's fairly straightforward with the W-2s. They want to make sure, okay, that matches your pay. You're working at ABC company. I see the W-2s. That's fine. Taxes, you may or may not have to provide 2 years worth. If you've got rental property, you're going to have to, but you may not for other loans out there. So make sure your taxes are readily available. And in summary, like I said, this is a 3-step process. I did the easy work, or your loan officer did, because we got you pre-approved, but that was probably 30 days ago. And things have changed. Now that we've got a contract, the processor at, the brokerage house where I work, or wherever, if you're at a bank, now they need updated information. So keep that in mind. But then they're going to pass the loan and the file off to the underwriter. And so the underwriter is going to be looking for items, and just keep that in mind as we get forward. And like I said, just stay on top of this, get your documentation in a timely manner, and you'll get to the closing table, without any problems. So hopefully this gave everyone a fairly good education of not only the documentation you need to get ahead of the curve when your loan officer asks for it, but also you understand why. There's a reason for all this. Sometimes it is a pain in the rear end. And honestly, the stuff I listed here, that's not everything. I mean, I kind of said it a few minutes ago about a story about an underwriter. An underwriter called me and said one of my borrowers about a property was still in his name. Now, it wasn't. It was settled in a divorce. Now, in this case, I just needed a letter of explanation. But sometimes we will need a quit claim deed from the divorce 5 years ago, whatever it may be. Okay, so just keep that in mind. We're not out to get you mad. We're out to get you to the closing table. Okay, so that about does it for this podcast. And I think we've been up close to the 30-minute mark, about 25 minutes. But if you have any questions, concerns, feel free to hit me up. Give me an email, Rob.Wolf@loanfactory.com. or my cell, 727-366-5722. And again, you can see me on my podcast, the Lone Wolf Podcast. And next time I'll see you then. Okay. Take care, folks.